All right, folks, let's do this. My name is Eric Wilkinson, and this is Spotting the Trade. I'm trying to get you what you need to know before you go. That's going to start out with talking about economic data, see how that overall impacts the markets, and maybe sprinkle in some geopolitical fodder to round off our all market analysis there. So without further ado, before you go, smash that like button, comment over at the side, folks. I'm going to be keeping my eyes out over there, make sure everybody's clear concept, and don't forget to subscribe. All right. Across the pond, what do we get going on? Quite a bit. Like I said, today was going to be one of those days we started ramping up for economic data. Yesterday, we saw a bigger than expected drawdown in crude oil. That's really not doing anything to crude oil right now. As we can see, crude oil is coming off a little bit, but we wouldn't expect crude oil to start selling off if we see higher demand for that. That's what this is showing with the crude oil inventories number yesterday coming in 1.5 million barrels under what was expected there. We also got industrial production numbers out of China, preliminary, coming in at 0.1%. Now, something to talk about with China as well. We're talking about, they usually, I've always said they cheat on their numbers. They're building like ghost cities, so you can't really rely on their GDP. But when we see the manufacturing PMI, Purchasing Managers Index, drip below 50, that is contraction, folks. So something to keep in mind. They are the biggest manufacturing sector in the United States. They must be thinking that maybe we're seeing a little bit of a pullback here. We were expecting non-manufacturing PMI, which is service sector, to be above 50 at least. That missed as well, coming in at 48.4. Not great signs there. Also later on in the earlier this morning, I should say, we got German retail sales coming in at 0.3% lower than they expected. Now, something we were talking about with all of this stuff kind of coming full circle is when we saw those inventory numbers start to drive higher, or the inventory numbers starting to move higher. I talked about this. It's starting to see some inventory build in the summertime is not something we want to see. Usually we see that start to ramp up into the fall, getting ready for the holiday season, not ahead of this. Consumer spending out of France coming in lower than expected. So continuously seeing that type of situation come about where we're seeing the consumer pull back just a little bit. Here in the United States, we did as well. The only place we didn't was in, I think, Switzerland, where we saw a big spike in retail sales there. But for the most part, across the board, retail sales waning a little bit, even here in the United States, where we got some economic data today. Unemployment claims higher than expected. 202,000 expected to be 197. That number just keeps creeping higher, making newer highs. Core PCE, which is personal consumption expenditures, coming in 0.4%. I thought that this would come off a little bit as we start to see folks pull back on some of that spending, right? We got personal income right in line with expectations. We've been seeing this uptick quite nicely, but personal spending coming in at 0.2%, expected to be 0.5. That's a big miss, folks. So when we're talking about seeing these inventory numbers drive higher and we're seeing personal spending come off a little bit, even here, United States or across the pond, we even saw China numbers. We're starting to see some iffy economic data coming out of the global economies here. So I'm a little bit concerned. We're seeing crude oil come off a little bit, bigger drawdown than expected. That should be bullish for crude oil, but we're seeing that market really start to come off here. Bonds are creeping higher, but that's just an insurance policy here, folks, is the reason why they're moving higher. We've talked about this. They've already talked about increasing interest rates quite a bit. Well, yesterday or this week, we saw that the inversion happened where 2s to 10s inverted, which is a signal for a recession. That's another reason why we saw some of the bonds start to make that move higher. It's maybe an expectation that interest rates are going to rise as high or as fast as they were originally talking about, with Bullard saying, I think at one point he was saying 3-4% by the end of the year, which is just absolutely astonishing. Bitcoin really not doing a whole lot, but one thing to note with the equities, we are seeing a little bit with the economic data yesterday and just the way everything's kind of coming out. It seems like the markets are starting to signal the economy is slowing a little bit here, and with higher interest rates, that will for sure start to slow the economy there. Dow Jones Industrial Average, a little bit toppy there. and again, E-mini S&Ps. Nothing really to see at this point because the topping patterns are just kind of ugly. They're just messy. They're not at the top of a move. They're kind of inside of a move. But one of the things that's really got me second guessing is the extreme vertical move here. You can see when you get those types of vertical moves, you are going to get some kind of pullback, maybe a half back, if you will. So I'd be looking for this to come down to somewhere around 4,400 for a pullback here. That's about 200 points, not a huge move, but it could take a few days to work that out. But we do need a bit. That's healthy, folks, when you get that massive move to the upside and it's almost vertical, to have some pullback there as people take some profits. That makes the ebbs and flows work out quite nicely there. Moving to the upside, E-mini S&Ps yesterday, pretty much an inside day from what we are looking at on Tuesday. So just not a whole lot going on today, really an inside day. I've talked about this time and time again, folks. We need a real kick in the pants to get this market to move one way or the other. Right now, we're getting some pretty good economic data, or I should say robust economic data, if you will. It's a bit on both sides of the fence. Some of it looks pretty good, where we're seeing some strength in consumer spending. We're seeing some strength in the demand for crude oil. We're seeing manufacturing do pretty good, but we're starting to see the consumer pull back on spending a little bit. What is that a product of? I say it has to do with higher prices. The gas, that has a tendency to always shut people down on spending ancillary or outside of that. And it is one of the first things that we see that push economies into recession, is when we get that elevated $100 a barrel. That's when it starts causing the markets a little bit of angst. With that all said, I do believe that crude oil is a little toppy. I think that we're going to look to roll over a little bit, especially with some of these crude oil related names. ConocoPhillips, you guys remember I got long at 80. I talked about this lowering cost basis with the covered calls. I just covered my 120 calls the other day. I think I originally sold them for $1.37. This is off the top of my head, bought them back for like around 20 cents. So lowering overall cost basis there. And I look at ConocoPhillips, we got a topping pattern. It's not a very good topping pattern, to be quite honest, but we did drop. Anytime I see one of these types of candles, I would have thought a little bit more bullish, but then you get counter opposing. That's usually an indication of a continuation pattern. A little bit nervous about that. I'm looking to cover the ConocoPhillips at 100. I've got a working order to sell them at 100 right off the open. So somewhere, hopefully I get a little bit of a pop there and get out of those, but that is a working order to get out of the rest of that trade there. That's about it. You know, I covered all my covered calls. Young's hurting a little bit, but I'm going to stay with that one. I have some short calls in there, and they are not looking too good as of yesterday. They are short right around the 120. So I'm looking to get out of these for a scratch. That means whatever collection of credit I got, I'm trying to get out of for this trade, just to get out, get moving. I think a scratch is a win, to be quite honest. That's all I got. I hope you guys have a great day. Check out today, later on this afternoon, you guys. Don't forget to hit the subscribe button with the little bell, because I pop in unannounced every once in a while. But the subscribe button to let you know that I'm doing a webinar. It's called Cracking the Code to Trading Options. Check that out. Don't forget to subscribe with the bell, because like these videos, I come in unannounced whenever I want to talk. So you need to know. What else we got? Smash the like. Don't forget to comment. If you can't take that, take it easy. Bye for now.